Tilaknagar Industries. That's the first corporate on our show. Now, their Q4 revenue growth was healthy. It was led by a 20% volume growth as the Andhra Pradesh issues got sorted. Margins also expanded, aided by a subsidy. If you strip that out, margins would have come in a little more than 16% in line with the company's guidance. Amit Dahanukar, CMD at Tilaknagar Industries, is now with us on the show. Amit, thank you very much for joining in. Q4 volume growth of 20%. Could you break that up? How much of it was in Andhra Pradesh? How much ex of Andhra Pradesh? And in FY26, what is the volume growth that you're looking at? Historically, you've done about 13-14% kind.
Right. So I think we ended the quarter quite strong. I think I've been giving the guidance earlier on the show so that, the revenue growth will be back. The Andhra Pradesh government, as all of you all know, it went through a transition when the government changed in June of last year. And then the current government, they decided to change the policy in terms of privatizing the retail, which took place in October of last year. So there was a transition, which is why quarter 2 and quarter 3 was slightly subdued for us in terms of growth. But I think that's behind us. And we have bounced back quite strongly in quarter 4 with the overall volume growth of 20%. Of course, the growth in Andhra Pradesh would be in excess of that. I think that's looking more like 30-35%. And, with the strong momentum build up in quarter 4, we're carrying this forward into quarter 1 and this fiscal year as well. So we're very optimistic about the volume growth for this year.
Okay. All right. Hi, Amit. Good
Hi,
morning.
Good morning.
Thursday morning, and we have to talk about spirits because of the nature of your business. A little early in the week, but let's get a couple of numbers out of you. Last year, you did around 11.9 million cases. For this year, what kind of a volume growth can you deliver since you're saying that things have bounced back and normalcy has returned? Are we bracing for mid-teens volume growth? And what would it mean in terms of revenues? Last year, you did roughly around 1,430 crores.
Right. So as I mentioned earlier, Nigel, I think the volume growth for this year will largely mirror, the quarter 4 volume growth. I think we expect clearly high teens volume growth for this entire year, and our revenue growth should roughly, track the same percentage.
So last year the revenue grew. Amit, hi, morning. Last year the revenue growth was in low single digits. I'm talking about top line, right? It's just about 3%. So are you saying it's going to be in the same vicinity? Why is that?
No, it will be in the same vicinity as the volume growth for this year. So the volume growth we are projecting in high teens, and we expect the revenue growth
to be in the same arena. Okay, let's talk margins as well. Let's talk margins and realizations. From what Mangalam tells us, your realizations per case are at 1,214. Which is a little lower than where they were in the same period last year. So what is the visibility on blended overall realizations across the portfolio, and therefore what will be the margin trajectory this year?
Yeah. So I think going forward, the NSR will remain largely in the same range. I think while we do get the benefit of premiumization and selling some premium brands, but we did a price correction on our flagship brand in Andhra Pradesh in November. So, that was done in line with, the competitive movement in that category. So that price correction now will have the full year effect in this year. So, by and large, the NSR will remain same. And the margin outlook also, will be around 15.5 to 17%. That is the outlook which we expect for this financial year.
Would it be closer to the upper end? In Q4, it was about 16.6% adjusted for the subsidy.
Right. So, while we will get operating leverage in this year, on back of, say, high teens volume growth, but, we will be investing quite heavily in A&SP in this financial year. I think they are on two fronts. One is, of course, as, I maintained before, as, we have been the leaders in the brandy category. And our endeavor now is to increase the share of voice for brandy. So, in line with that, there will be increased spends in terms of communication. And also we have few premium launches, which we have already done. We launched Monarch, which was a luxury brandy in September of last year. And we intend to launch a luxury whiskey in the first half of this year. So, the premium brands, the first year, the advertising and marketing is going to be slightly skewed. So, with increased A&SP spends, that will put some downward pressure on the margin as well. But, we're in an investment phase now. Our company is very healthy. I think we're looking at investing behind our distribution, our international footprint, and increased brand footprint. Yeah.
Okay, all right, interesting. You know, that you're looking at launching a premium whiskey as well. And in the last few years, you know, after getting out of that debt trap, suddenly you have started diversifying from being a core brandy company. Currently, the brandy has a mix of a percentage. It's come down, I think, to around 91%. How do you see this mix evolving?
Right. So, Nigel, the previous year, brandy as a percentage of our portfolio was closer to 95%. So we've made some progress in this year now where brandy is 91%. And, our vision is that, by 2030, which is, say, 3-4 years from now, brandy will still continue, being the core of our business, but we expect it to be around 80% by 2030.
Okay, so 80% by 2030, that'll be the share of brandy.
Yes.
Amit, I'm just going back to that point of competitive intensity that you mentioned for your flagship product, which is why the overall realizations were impacted. And we'll see the flow through this year, like you're saying. I'm just a little curious. I mean, is that only for one particular product? Is it only in one state like Andhra, or is it across the board? And as a corollary, let me also ask you this. I don't know if you're impacted at all with this UK FTA. Now, I don't know if any of your premium products will see any competition. I'm not sure about the imports. If at all we're getting brandy, or any of your portfolio products could face more competition, especially at the premium end. Just tell us that, and also a little more about this competitive intensity and whether other brands in your portfolio, can you take any price hikes at all, or will we just see pressure?
So I'll take the second question first. With regard to UK FTA, I think, our company, we've had very limited imports. So I don't really see any material impact for us right now immediately, but I think it's a good development for us in the medium long term. As we
does it add to competition? I mean, I don't even know if we import any premium brandy from the UK or not. But do you see more competition because of cheaper imports coming in from the UK?
So that's a difficult question to answer right now. I think we'll just have to wait and see how it plays out, because of course we compete at price points. So of course within brandy well leaders, but we compete with whiskeys as well at similar price points, which is one of the reasons we undertook some corrective pricing in Andhra Pradesh in last year, because it was more in terms of being available at a particular price point. So I hope that answers your first question.
Amit, the company has also been embroiled in a trademark dispute. I think the news came out in the month of February, where other companies are allowed to use Mansion House, Savoy Club trademarks. And you sought an injunction against that, but I think it was quashed by the Bombay High Court. So what is the latest on this particular dispute? And has there been any loss of revenue or any impact on your business, negative impact on your business on account of this?
Right.
And how will you expect this to proceed?
So there's been no negative impact, because our use of the mark, continues exclusive and uninterrupted, and we have been the exclusive and uninterrupted users of the mark in India since 1983, and that is continuing. So there's no direct impact on the business. As far as the legal proceedings go, the matter is sub judice, and currently the counterparty, the body corporate against whom we had sought an injunction, they have given an undertaking as to they will not act on the February 7th order till the next date of the hearing. So currently it's status quo.
Okay, all right. And just to clear the air, with regard to the M&A opportunity, from being heavily net debt, you've moved into the green, must be feeling good about it. But the last time around, I was quizzing you about Imperial Blue or other such brands. Anything on the horizon?
So you're right. Now, we're cash positive, and the outlook also is looking good for this year. So we'll always be alive. I think our strategy would be focused on organic thrust as well. And the outlook for organic growth also is looking good for this year. But we'll always remain, alive to inorganic opportunities if they, fit in line with our, strategic vision for, the next 3, 5, 10 years.
And Imperial Blue?
So I can't comment on specific opportunities, Nigel. That's a difficult one. But we always evaluate. I think whatever comes our way, we keenly take a look at opportunities.
Okay, all right. Thanks a lot, Amit, for joining in. That Samsara Gin, it's a very small part of your business, but that's a good one. Brandy is not something that I taste, but I think that Samsara Gin is good.
You've been a big fan of Samsara, Nigel.
Yeah, I mean, with the last few times, but y'all have still a small stake out there. So, from the stock market perspective,
we have a small stake, but we do have a pathway towards increasing our stake, and that business also, though it's been small as you pointed out, but it's high on the revenue and it's grown well for FY25 as well.
Amit, now I have to ask you this since you mentioned. Are you going to, because as a brand, it's extremely popular. We all can tell you that. Are you going to be looking at increasing your stake in Samsara? How much money can you put to work? How much can you go to? And will it at some point start contributing to the consolidated numbers?
So at some point, we do expect it to start contributing towards consolidated numbers. And we do have a pathway towards increasing our stake. And we are looking at that actively.
Okay.
Maybe that's a part of the 2030 goal where the contribution of non-brandy comes down to, increases to 20%.
Too much of alcohol in the morning. Amit, thanks a lot for joining in. If we had more time, I would have asked you how the tequila market is shaping up with the gin market. But that's
markets. Now we go back to
Thanks a lot, Amit, for joining in. Well, let's get in. Deepan Mehta back.